Welcome, welcome, welcome. How's everybody doing? Hope you are doing well. My name is Andrew Kuhn, Focus Compounding. See you next to Geoff Gannon. Geoff, how are we doing today?
I'm doing very well, Andrew. How are you doing?
Doing great. We hope everyone else is having a great day as well. So in today's podcast, we're going to be talking about an industry that has been in the news a lot lately, and that is movie theaters. So obviously, movie theaters have been impacted incredibly by COVID. I was reading Cinemark's last quarterly earnings. I think they were down 99% in revenue.
Yeah,
No surprise.
I would guess that it's right now. I think it's running about box office now about 90%. Yeah.
And in the news last week, AMC was, in news about, is there going to be a potential bankruptcy there? They have a lot of debt. Movie theaters have been a very interesting investment, and just currently right now, I think they are probably just a good potential hunting ground and to talk about. And I have a lot of questions about it. So you are very familiar with movie theaters. You have actually recently been kind of doing more of a deep dive on these companies, right? And kind of
on some of the theater companies. Yeah, that's right.
Theater.
Yeah. And I've also should say I've been to the movies again. I've gone back. So I've been to the movies like 3 times a week and stuff.
Were there a lot of people there?
No, I've not been there where there's more than one other group. So there's literally no one. It's actually, if people are afraid of COVID stuff, now's the time to go to movie theaters because it's a lot less crowded than anywhere else I could go.
Really?
Yeah, it's very not crowded.
Got it. So I'm just kind of curious. So I don't know if you knew, and I kind of want to talk a little bit more about this on our radio show podcast that we're going to do. But Dan Loeb is the largest shareholder in Disney. And he came out last week or maybe a week and a half ago basically telling Disney that they should suspend their dividend indefinitely and take all that capital and apply it back into their streaming business and really invest in that and look to cultivate that and stuff like that. And I guess there's so many questions right now just on movie theaters and streaming, and I'm kind of wondering, I'm like, are we going to look at this in 5 years and look at a lot of these movie theaters and be like, gosh, that was a bargain for that? Of course, people are going to go back to movie theaters. Yes, attendance has declined at movie theaters in the industry over the past 10 years, but it really hasn't been as much as people think it has. And box office revenue has continued to grow. Average ticket per person, the sale price has continued to grow. Movie theaters are a unique experience that is cheaper from like a competition standpoint than going to bowling alleys or other theme parks and stuff like that. Are we going to look at this in 3 to 5 years and be like, that was a no-brainer? Because look, Cinemark, for example, you could pull up where it's currently trading at. What's it, CNK?
Yeah.
Cinemark Holdings. The market cap is 90.
It's under $1 billion.
Under $1 billion, and we could look to see. At the end of 2019, it was about $4 billion.
Yeah, I would say in normal times, Cinemark stock would be worth probably about $45 a share, and it's at like $8 now.
We could look at AMC, which is more of
AMC will probably be bankrupt.
They have a lot of debt.
That isn't COVID related. They may say it's COVID, but I would have said that AMC was at risk for bankruptcy before COVID happened.
Marcus Corporation, a company this was my movie theater growing up, $228 million right now.
Right, and that used to be like $1 billion company.
I wouldn't call them insolvent when I was looking at their business. And if you look at the market capitalization, $1 billion.
Cinemark and Marcus are the two most conservatively financed of the meaningful sized ones I'm aware of. Technically, Marcus, I don't remember if they're about the 5th largest or something. Cinemark would be the 3rd largest, but there's a huge drop off after the top 3. So AMC and Regal being different in terms of the risks they take and stuff. Yep.
I'm just kind of curious though, like, is the time, because it's been happening, right? The time that movies will air at movie theaters is starting to decline because it's going more to like video on demand or streaming and stuff like that. I'm just kind of think like, what are the drivers to the movie theater industry? Is it still going to be around? Is there an investment case for the movie theaters?
Sure. So first, it's not really relevant whether it grows or not because it only has to grow faster than the number of theaters left. So that really doesn't matter. So like I've said before to you, I think movie theaters are much better business than they were 30 years ago. Attendance as a percent of population stuff is slightly down in that period, but the industry is much more heavily consolidated in a couple ways. One, it's more heavily consolidated versus the studios with the exception of Disney. The one company that has a tremendous amount of market power that no one's ever had in the US history of Hollywood is Disney now. So that's never happened before. If you just look at how many of the top 10 movies they had last year or something, and how many they're likely to have, in the next year and the year after that. So that's changed. But as compared to all the other major studios, the theaters have gotten bigger versus them, which is helpful in terms of bargaining power and all that stuff. And and then in terms of attendance and stuff, attendance holds up pretty, I look back to 1995 or so, attendance holds up pretty, I would say it's fairly stable considering two factors. There's no indication to me that demand for movies is down for two reasons. One, there's been a shift in population. So your population aged a bit. And, an older population is going to go to the movies less. It's very age driven. And then two, you raise prices faster than inflation and stuff. So you also increase the real pricing, and yet you still had very similar numbers of people going. Now, any one year is driven by what movies are out. I mean, but over a long period of time, I'm not seeing a huge difference that way. And as you said, generally they're able to have higher ticket prices over time and way higher concessions for those places that invested in selling a lot more concessions and a lot of add-on stuff around it.
So we're in 2020 now.
Okay.
Movie theaters are, they're reopened, a lot of them and stuff like that.
Right.
A lot of movie studios, though, have been shifting,
right,
when they're going to release their movies.
Yeah.
So I was thinking, when I was going through and doing the research, I'm like, okay, what are the incentives for the movie studios right now? And what are the incentives for the movie studios to bring out a movie on, services such as like Netflix and Hulu and Amazon Prime versus the movie theaters? And is there an incentive for them to wait until, either A, there's a vaccine, attendance numbers are back up, second half of 2022, and then what's that going to do to movie theaters now? Because I was like, wow, should we just be looking at movie studios? Is there more?
No, I don't think movie studios are very attractive at all. I think the pricing on them and stuff is nothing like theaters. Here's the problem with theaters, though, and why I think no one wants to buy the stocks. There's not going to be any revenue coming until April. So, because...
Of 2021?
Of 2021, yeah. Because what you were talking about is you can shift movies back, and movies are you invested a huge amount in the asset. So, and then it's perishable once you release it. If you release it the ways that you were talking about and it doesn't go well, let's say you're Universal or something and you release on a platform that you have that's not very popular, you just wasted $150 million or whatever, the movie could be in terms of your sunk cost and in terms of how successful it might be. They've moved some movies in some cases and did some stuff that I think shows either testing something out is one thing that some did. And then also I think some specific movies. We talked a little bit about Mulan, which they were able to open domestically in China and then online in the US. And I think that makes a lot of sense for Disney because online they want to drive online in the US. And then China, you're not really hurting yourself. And I never thought it was going to be a very big movie in the US, but it was going to be big in China. There are other movies where it's tough. The one that's like the worst is, I saw Tenet in theaters, and that movie is permanently harmed by this in a tremendous way. Yeah. The value of Tenet has been completely decreased a lot for whoever owns it, I guess probably Warner Brothers.
In my notes, I had a question. Are movie theaters like radio? They spend a lot of time rolling up assets and levering up and doing so. The industry isn't, there's not a lot of growth coming from the industry, but pandemic excluded, they generated a ton of cash.
Yeah.
And it'll be, painful to get back to, you think, April till attendance is really, back up again. But, like going forward, movie theaters will be okay, but it'll be a long road for some of these companies just paying down debt and stuff like that.
Yeah, and that's the biggest problem. So what you said about radio is exactly right. People think with radio, and I think with movie theaters, that they're like, when they write stories about it, they're like, well, AMC is going to be in bankruptcy and stuff because of problems in the movie industry, or, iHeartRadio or whatever, or any of those things. It's really because they took on a lot of debt to buy things and stuff like that. So we'll see. This is so bad, and there'll be so little revenue for so long that it could actually threaten companies that were conservatively financed. But until now, if you had bankruptcies in the industry, it was purely for that reason, because there's a lot of scale advantages. They're really big scale advantages. And so increasing your scale, just like in radio and stuff, by buying up all these local operators does have big advantages for you. And so it makes sense to borrow money, buy out people who aren't operating as well as you could operate it, then you operate it better, and you have those advantages. Kind of like when you read things about Cable Cowboy or any of those, it has a lot of those same things, but you can overdo it, and a few of them Always overdo it.
Of course.
Yeah, especially when it's in the better times for the industry, when there's more growth and stuff, as opposed to now. You probably won't have that problem for a few years coming out of COVID because everyone will be stressed in terms of balance sheets, and it won't be popular to do those kinds of deals.
Mm-hmm. So doing the research, I actually was surprised also by the stat that, about 2/3 of the box office revenue comes from international.
Yeah.
So I'm kind of curious how you think about handicapping that. And because a lot of people in the United States, I think the consensus is who still goes to movie theaters. A lot of people still go to movie theaters. We just talked about the stats behind that. That hasn't really declined a lot. And really what's inclined is the box office revenue and the average ticket price. But I'm kind of curious how you think about just internationally, people going to movie theaters. Cinemark is very tied to international operations.
Right.
They have how would you think about that?
Yeah. Well, one, it's a big deal for studios. So it's a really big deal for studios, and it's the most important thing for them deciding what to acquire and stuff like that is how well they can get distribution internationally. That's what it's usually about and stuff, not so much here. So I was talking about in another podcast, I was talking about how Paramount doesn't have a great market share here or whatever, but they still are capable of distributing movies internationally successfully. So it's still a valuable thing for people to have a distributor that does that. There's only a handful of them, It will change some things in terms of movies and studios and stuff because China's such a big market and stuff. There'll be more movies made that are not intended to play big in the US. There'll be a lot more of that. So you'll see more and more movies where you're like, oh, why is this Hollywood star in this movie that looks terrible? It's not meant for an American audience. And there's huge differences in movies in terms of how much is international versus in the US based on what kind of movie it is and stuff. So when you make a movie like Moneyball or something, that can't play big in the rest of the world. But when people in the US are like, well, Troy must have been a disaster or something. Well, it's not because it can play in the rest of the world, that kind of movie. So I think for most movie theaters, it's just going to be US domestic focus. I don't think the US companies are going to be interested in buying stuff in other countries that much. But it's possible. And Cinemark has good operations in Latin America. They're clustered and stuff like that. They're just, they have good assets there. But it's hard to get those, I think, for the most part, to buy them in other countries that way. And it will definitely be after COVID and everything. Now, maybe there'll be some countries that have more problems in the one particular country versus another. And so their movie theaters might get in more financial distress and be able to be bought out by someone else. There's also the issue that there's been some change with antitrust stuff. So eventually you could see vertical integration, which was banned in the US. So for the last 70 years in the US, a little bit more than that, you can't have vertical integration in the industry. And that would make a ton of sense, vertical integration. So again, like the cable cowboy idea, being a cable system operator and also owning networks that can be on that system was valuable, and it was allowed with certain rules and stuff at different times. But that hasn't been allowed for movie theaters and movie studios in the US, and now it will be. So someone will, at some points you're going to have some degree of vertical integration.
And what do you think that looks like?
I don't know exactly. The most logical one is Amazon buying a theater. I think that's really obvious. Because some of them have problems, like Amazon, Netflix and stuff. If they keep making movies, the studios, they intend to be a movie studio too, they may have problems with getting sufficient distribution for their movie. And so it may make sense. Also, you get more data too. That's the other thing, because you'd be running a loyalty program, sort of like Amazon owns Whole Foods, so they get all the data on Whole Foods, what people actually shop at. If you owned AMC, you would have this great data from having their subscriber base, that of all the people, there's, millions of people that are using it for the 20% off on concessions or whatever, but you're getting to see what movies they go to, when, and all that sort of stuff, and target them better that way.
Let's shift to, I guess, just 3 movie theaters that we could look at: AMC, Cinemark, and the Marcus Corporation. I guess if you had to boil down the investment thesis, like what's important and what's knowable, and what would the drivers be of the thesis? Like when you're looking at it, is it really, okay, when is there going to be a normalization of attendance? Will these companies be able to survive until that normalization of attendance? I mean, how would you typically think through that process?
So, my first thought would be, how well can they survive till April? The reason why I'd say that is because if you look at the movies that haven't been put out and the movies that are scheduled to be put out, if movie studios want to bump movies, it becomes too difficult to do that once we get to about April of next year. So the reason for that is that you have an incentive, a huge incentive if you're a movie studio, right, to move these movies back until you know that people are in theaters, right? And then the theaters have the problem that they can't attract anyone into the theaters unless they have big movies to show.
Sure.
But the problem is, as you can see there, like things like, and we'll see if it gets changed, but for instance, like this is a good example, MI7, right? So MI7, they actually, that's Paramount, I guess, they actually intended to film back to back on that. So they wanted to do 7 and then 8, like, 2 years later or whatever, instead of how they usually space them out.
Yeah,
but
see that?
Is it 1 year later? Yeah.
Yeah,
So
1 year later.
Well, yeah, 2021 and then 2022. And so that creates a problem. Same thing with Marvel and stuff. They already planned some of this stuff. So those slots fill up for movies. And so there will come a point where it doesn't make sense to keep pushing it back because you'd be up against movies that are too competitive with yours, which is the big problem, right? So like if you're, if you're John Wick or whatever, would you want to avoid coming out the same weekend that the Fast and the Furious comes out, or the Fast and the Furious and a Mission Impossible movie or something? There comes a point where you look at it and your audience just would get so fragmented from that, and it would be a big mistake,
That's one thing I learned from Total Recall on Arnold Schwarzenegger, how I never thought about how important that was to the process. It's almost like there's a movie cartel. And they all kind of work together so like no one steps on somebody else's feet, because it's like if you're going to release Jurassic World, for example, maybe you don't want to go against Spider-Man or stuff like that.
Exactly,
it's very important.
And so, and you definitely don't want to go against a couple movies that could be happening at the same time, and that they're still popular. You're opening against a movie that's big that's opening with you, and then there's also a movie that a few weeks earlier is still popular, and all those risks. And so that's going to happen to them in terms of a few movies, because each of these studios does several movies. And so you're going to have that problem, because if you want to protect this movie, then you have to give a better date to another movie. You have to take a risk with another movie because you have such a big slate versus what you could actually, have happen there. Like, for instance, we're basically having movies bumped now for like a year. So let's say if it goes till April, then we'll have had a year of movies that should have been released but weren't. That's too big a backlog for Hollywood to deal with and stuff. So what will start happening is you really got to make choices. Like, do you make the choice of just going digital with something? Do you make the choice of releasing it even though people aren't really back to theaters? Because you can't, like, when you make a choice like the April thing, say you have a movie planned right now to be the middle of April, and then you say we need to bump it. Well, the date you need to bump it for might be 6 months later. It's not like you pick a few weeks later or something, because there's only certain slots available, and there's only certain times that you want to be releasing movies into. Because there's part of the year that you want people. Generally, you don't release a movie in like February or something because not a lot of people go to it. But you might sometimes because there's like no competition. So that's why you do it. So I think there's literally like no one in theaters right now. So they can try to push it off for a while, but there will come a point, and I think that point is probably like April. I think it's hard to push any further than April, but we'll see what happens with COVID.
Yeah, you're starting to see, Universal pushes the latest Jurassic World into 2022, so they're trying to... And I understand that from like an incentive standpoint of the studios. Obviously, we would want to release a film right now if nobody's going to the movie theaters. So with that all said, you would be very focused then on the businesses being able to survive, I imagine, until April, or there's some sort of vaccine or whatever. So, like we have Marcus Corporation up right now, and you could see their debt. And, I guess when you're starting to handicap this and you're doing your research, what would you be doing? Would you be, listening to or reading the transcripts to see like how management is thinking about it? What have they done through the process? How are they basically going to be able to survive? Because I would say they're all in survivable mode right now. Kill or be killed, quite honestly.
Yeah. So Marcus did a capital raise, and that helps lock up money for longer. So they did convertible bond. And there'll be companies needing to do that. This is the kind of thing where, when we were talking about it with COVID earlier, where I was saying I would wait till a company was recapitalized and stuff. When a lot of people asked about like cruise lines, Dave and Buster type things, whatever, some restaurant stocks, stuff like that, is your risk of the recapitalization risk and stuff. I don't think it's that terrible here because, like I said, like say Cinemark or something, right? If you think it can be done, if capital markets are pretty favorable for that kind of thing, generally, if there's money out there at high rates and stuff, if I would say it's normally a $45 stock, right? And you're buying in at $8, well, you could get a triple on a stock that dilutes by half. because it's 48. Let's say it's worth $48. It dilutes halfway its equity to $24 now is the intrinsic value, and you're buying in at 8. You could still get 3 times. So it's okay to look at them and say, okay, they'll be recapitalized and I'll make money on it. So it's a question of whether they can do that. Obviously, companies like Cinemark, for instance, have huge amounts of debt and leases. You can see that there. So like the debt position is like double the market cap or something. And then you have leases on top of that too. Now, I don't know. That's the other thing. I think you could probably work through some leases. Your landlords aren't in a great position, and they would like, if you're like Cinemark, they're big theaters. They have lots of screens. You would like to keep them as a tenant and stuff. And the reason they're not paying you is because they have no one in the movies.
That's what's good about Marcus is I think they own 60% of their real estate.
Yeah, so Marcus owns a lot, and they have things both in hotel and movies too. So they're somewhat diversified that way.
And they're not having to negotiate constantly with their landlords.
Yeah, so right. So you look at that. You look at the PP&E for them, and like how much of this can you borrow against? How much can you do that way? A lot of it might have to be at very high rates for short periods of time. We talked about that when Carnival borrowed at like 11% or something, and technically it was like a secured thing, but it's really poor quality in terms of how well secured it is. But doing things like that, high interest convertibles, that makes it a lot more attractive. The Marcus one, like they borrowed at was it 5%? Do you remember? Yeah, 5%. That sounds like it's not very good, but you were getting a conversion into the stock at like a small premium over it, or a normal premium over it, on a stock that was at its lowest point in, these stocks, I don't know, do you have a chart on them? I mean, basically these stocks are at about their lows, at least Cinemark and Marcus are. They're about their lows since COVID. They're at about the same level they were in the middle of the shutdown, and they're lows that are about in line with like what it was in 20 years. For one thing, these things are as cheap in some cases as they were in the middle of the financial crisis, and they're so much more valuable than that if you look at how much the business has grown, and also just like their position in it and all of that, and their financial situation and all that. Except they're going to have to burn cash for like 6 months or something. Yeah, so they're like basically they're at lows that are similar to what we saw in the financial crisis. It's hard to find stocks today that are at the same price they were during the financial crisis and yet are much better businesses.
Cinemark, for example, they said that they've managed their cash burn to about $50 million per quarter now as well. So they've been like pretty prudent about managing that.
There's not going to be a huge difference, I think, of whether they're open or not. This is something that like they have to decide what to do, and I think the press is making a really big deal about it, about whether they decide to close back up. No one's there. The staffing levels are not high. There's stuff that they would have to do anyway. They can't really like just in terms of support stuff, like flip a switch and suddenly be able to have, they need some headquarters stuff no matter what, even if they weren't open, like a month or so ahead of when they do reopen. So like shutting down probably doesn't save them a lot of money, and it probably hurts their credibility with studios. Like being open and stuff might help them think that they can get back faster. Now, the thing is, if we look at these stocks, they don't have super strong balance sheets and stuff, because it's an industry that's used to being run pretty not with a lot of capital, not with a lot of liquid capital and stuff, because you have very high free cash flow generation or cash flow from operations. Like if we look at the cash flow statement, for Cinemark, for instance. So you can see cash flow from operations before this year, it was running, let's say 500 million plus, right? That's really high on a stock that we just said is like, let's see, it's a $1 billion stock. It has $2 billion in debt. I mean, it has some leases and stuff, but even that, you're talking about low prices. And then you see with the PP&E, the CapEx that they're spending, companies like Cinemark, that's actually not all maintenance CapEx. So they were spending like $300 million a year on CapEx, but they were doing a lot of things that are going to help them increase their ticket prices and increase their concessions, which is how they've been able to do it all the time. So like, changing everything to more comfortable seating and stuff like that is very typical of what they've been doing, and also Marcus. Yeah,
I think the whole industry has gone through that change, making it more of a enjoyable, the seats recline, kind of more intimate. Some of them, you could buy, they have like a waiter or waitress come, you could drink alcohol, stuff like that. They've really shifted the experience in, all movie theaters.
Yeah, but it's going to be a question now of whether they can do that, because the first thing they're going to do is spend nothing on CapEx. So, if we look at the 10-year numbers on these companies, you can see why it would be. So like, they're not no growth companies. These are companies that have grown as faster than other things in the market, So like you can see their revenue, assets, EPS, they're all in the range of like, 6 to 9% a year, which is perfectly in line. I mean, and that's basically since the financial crisis and stuff. So that's perfectly in line with all sorts of other businesses. So they're not like declining businesses in any sense that way. And usually each year they have higher gross profit, operating profit. They certainly have higher ticket prices per person and concessions per person like every single year. That's been a continual trend. So your profitability per customer has gone up basically every year.
It still seems pretty cheap to me.
Well, that's not the average ticket price in some places. That's not the average ticket price. But it also factors in some other things. But yeah, that's true. Average ticket price $9.11. In 2018. That sounds right.
Got it. So how was your experience at the movie theater? Were you the only one in there?
For some, I was, there was usually like one other group. Yeah. It was a good experience. I mean, it's a good experience. I mean, I like it fine that way. The main problem is, obviously the movies, that movies that you would want to see and stuff have been pushed back. And so you're getting a lot of movies that are not the strongest, movies coming out. And then, and also, to be fair, too, like part of the reason why you're having no one in some movies is because they have such a limited slate of movies that they have a movie that normally would be okay movie, it would be run of the mill of what they're showing, not their best movie at all, and yet they're playing it every 30 minutes because it's the one thing that they have as a draw right now. So like the latest James Bond movie was intended to come out in April. Then it was pushed till November, and then it's just been pushed to April of next year. And that's typical. And there are several superhero movies that were moved like that. So I think the hardest thing is figuring out whether they can last till, I would say, April. I don't see that. I mean, there's still some movies planned right now officially between now and April that are meaningful movies, but I wouldn't be surprised if those get moved. I would really be surprised if people are willing to release movies before April.
Are you more interested in cruise lines or movie theaters?
Movie theaters by far. Actually, to be honest, movie theaters to me definitely seem like the cheapest group that there is out there. I just think it's a much better business than cruises. And so, I mean, I think it's a good business, honestly. I know that people don't, but I do. I think that the economics have gotten better and better for the few remaining ones. The scale's up. I also, honestly, would not be surprised if these things are sold to someone else in the industry within the next 5 years or so. I really think that they've gotten so big. So some of these like market share of like an AMC or something, I don't know exactly, but it could be 15% or something. They're at that numbers of screens and things. So your top 3, 4, 5 movie theater chains are now a meaningful part. They're like close to half the industry or whatever. Sure. Yeah, and they own some other stuff.
I didn't realize how fragmented the industry is too. Because I mean, just when I do think about movie theaters, I think AMC, Marcus, Cinemark.
Right, but they were also regional. And now you have ones that have more of a national footprint and all of that. Even these are very regional. Like Cinemark and stuff is big where we are, but it's nothing in like the New York area. Marcus is very big, where you were talking about. It has some small number of screens in some
Illinois,
other places.
Wisconsin.
Yeah, Wisconsin, it must have huge market share, I would guess, because it can't be that big of a market, and they have a lot there. There are other ones. The other one that value investors like a lot all the time is Reading. Reading owns the Angelica, which does like art movies, things like that. And it also does Reading theaters, which are a handful of them around the country, which are more like your normal like multiplex type thing. But it actually owns a ton of real estate in Australia and the US and stuff. And it also owns a particularly bad thing to be in now. It also owns the theaters for plays.
Interesting.
Yeah, so you rent out the theater and stuff like for Broadway and things like that. It owns those too. So it's not a good mix for them of what they have. But they have a lot of hard assets and stuff that people are interested in.
I thought of you the other day. I think it was Cinemark. You could rent out a whole movie theater for like $99. I was like, I feel like this has got Geoff written all over.
So they've always done that, and they've reduced their prices and stuff on that, as part of trying to draw people in. Obviously, it's not working that well. So
we've talked about privately before, like what is one irrational thing you would ever want to like purchase in your life, or just something where you're like, well, if money was no option and you wouldn't explain to someone to like try to justify it, just what's one thing that you would want, and you said a movie theater.
Yes.
Like in your house.
Yeah, that's true. When you think about things of like what people, I stayed at a house once that had a separate building. Like it was intended to be like a garage or something. They didn't need a garage actually, so they probably had been intended to be a garage originally. And then they converted it to just for watching movies, you know, as a home theater, but it was completely separate from the house and everything. And yeah, that's very nice. So I could see that as a thing that people would do. Yeah, I could definitely see that. Yeah, it's a different experience. I mean, like I said, I'm certainly glad that I saw Tenet in a movie theater and not in a home setting. It's a totally different experience.
Oh, no doubt.
Yeah. Yeah. But that movie did, I mean, in the US, now not in other countries, but in the US, it did a tiny fraction of what it would be capable of doing in normal times. And that may permanently harm it. I don't know, you know, because it may be overlooked more compared to other movies that he did, that Nolan did. You know, it may not get the recognition of other movies because it was released at a time when people couldn't see it and create a buzz around and stuff. So all of its aftermarket of that, you know, is just shrunk down because of it. You know, now some of these, I don't know, they may also try re-releasing movies, and at some times they were playing some movies that were also online at the same time, you know, some movies that could be bought online but also shown in theaters. There was some of that, and there seemed to be some re-releasing of stuff, not just like classic films and stuff like that, which they've been doing, but also stuff that like it was supposed to come out during COVID, and then like they put it online and they try to put it out now, but I don't think that there's a lot of appetite for it. It's interesting because people are really okay with going to malls and things, much more so than theaters. And so it's kind of, I think it's a problem though, mainly of not having the films come out. You know, we talk about that a lot with like chicken and egg problems. And that's the problem here. People are like, they haven't been to the movies for a long time now. And so the question is like, it would take a movie they really want to see to bring them back. And so, but then studios don't want to put movies in there when there aren't people there.
Because that's the gamble by the studio. You have one time to do that.
Yeah. Now I think a lot of people will say like there's some fear of like an existential threat to this industry. Like there's fear that because of COVID, people's behaviors are going to change a lot and stuff. I don't think that's really why the stocks are the way they are. I think it's probably that there's just, you know, that if you buy it now, will not be good news. Like they're just, I'm sure, I feel very sure of that if you bought it now, you're going to wait. You're going to own something that for 6 months or more, there just cannot possibly be good news.
How much is that baked in though?
Oh, I think that's 100% baked in. More than 100%. But still, if you convince someone that a stock is worth 10 times what it is now, but there can only be bad news for 6 months, will they say, well, I'd rather wait and buy it?
Of course.
It's very hard to convince someone to buy a stock that you know. Usually you don't know. You think, well, next quarter might be better. I mean, if you bought into some commodity thing that's doing really badly, the price could turn around tomorrow a little bit, you know, if it's that cheap, you know. But that can't happen here. You know it will be bad for a long time, which is different from other COVID type stocks where they're like, well, it may not be as bad as we think. At this point, I don't think it matters. If they came out with a vaccine tomorrow, and COVID was gone instantly, I don't think that they could suddenly rush the movies in before, like I said, like April as having a regular. I don't expect any regular release schedule, anything approaching normal in terms of the quality of the movies in theaters until April. And it could be worse than that. But I don't think it can be better because you can't just, having not planned to put movies out, suddenly tell everyone, okay, here's the movie and you got to go see it. You know, you don't have that kind of marketing thing. These are very not overlooked stocks though.
Absolutely not.
So they're highly speculative stocks. They have incredibly high volume. Yeah, share turnover for Marcus is like 700% there. But I mean, just like, especially in recent times, I think I've noticed that the volumes on them are incredible. They have sometimes volume like you'd expect on a much, much bigger stock. Because like Marcus is officially a micro cap now, I guess, right?
Yeah.
Yeah. And definitely doesn't trade like one in terms of how much volume there is. So there are lots of people buying and selling, speculating, I guess, on COVID and things like that. They're highly speculative stocks, I would say. Yeah.
Got it. Cool. Well, thank everybody so much for tuning in today on the podcast with Geoff and I. Make sure you hit that subscribe button both on YouTube and the podcast side of things. Thank you so much for all the support, and we will see you in the next podcast.